Hello, my name is Yves Longchamp. I'm Head of Research at ETHENEA Switzerland. The last Fed decision was very instructive to us. We have to keep in mind that the Fed has a dual mandate, which means that on the one hand, it has to focus on inflation with a target of 2%. On the other hand, it wants to achieve full employment, which is exactly where we are. So given that, the Fed would need to increase rate, which it didn't. And then it's interesting because it means that the Fed look at other indicators, and the first one is market volatility and the second one is China, and China is a big concern. In our view, there would be 2 additional rate hikes this year. In Europe, according to the latest leading indicator, there is some slowdown. But when we look in details at growth, where it comes from, this is mainly consumption, which is robust. And this is also thanks to the periphery, which is coming back. And there is plenty of pent-up demand. So from that point of view, growth in Europe is relatively robust, I would say. The key issue remains inflation. Inflation is at about 0%. Inflation target, according to the ECB, is 2%, so we are way below. And it means that the ECB had to intervene again. And it means that there is additional quantitative easing. There is a new program on credit. There was also a rate cut. It would probably not change much on the inflation situation, but continue to overstimulate growth. What is interesting also to notice that when you look at what Yellen and Draghi said, they come to the same conclusion, which means that the main risk is not within their respective economies, but outside global development, which means actually China. In China, the slowdown is a reality. Consumption is slowing down, still growing but slowing down. Industrial production is growing but slowing down. And the only exception is investment, which is picking up. But investment is picking up because credit is very loose and credit conditions are very loose, and you have also a fiscal stimulus. What has changed is the balance of payment situation. This is the main concern for international investors. FX reserves have declined quickly, but in the last month they only declined by 30 billion, which is far less than before. So in terms of symptoms, this is much better. There is a weakening of the symptoms. But the thing is, why do we observe that? Mainly because we have stricter capital control, which are enforced. What we hope for a better outlook would be to observe improving industrial production, a weaker US dollar, and higher global prices. The ECB, the Fed, and ourselves are aware of this risk and remain cautious. Goodbye, talk to you soon.